Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Although we're looking at the U.S. dollar as the base currency for everything. So as you can see here, we've got 6 major pair values that we have access to. And those of you, again, that trade the spot market on a regular basis will notice that we do have the major currency pairs available here. So you'll see that the Canadian dollar, U.S. dollar base, which is not unlike the spot market, the ISE symbol for that is the CDD, and as you can see here that each one of these currency pairs have their own specific symbol based on, again, for lack of a better word, the index or the pair value that the options are traded upon. So you've got the CDD, you have the YUK for the yen, you have the EUI for the euro, the BPX for the pound, the AUX for the Aussie dollar, and of course the SFC for the Swiss franc. Now, something to keep in mind when you're looking for a specific chart to identify certain opportunities to apply these option strategies, FX option strategies, you're going to want to use the ISE symbol to view that particular chart. And in fact, you can trade the ISE FX options on most of your most direct access brokers platforms. So whether you're with Options Express, whether you're with Interactive Brokers, whomever it is, you do have E-Trade. You do have access to these ISE FX options pair values. Now, Alan had a question there that I'll maybe just answer. Usually we like to save them for the end, but what's the difference to exercise or close the position since it's settled in cash? Well, essentially, Alan, you cannot exercise your right to own U.S. dollars here based on whatever the pair value is. Essentially, that pair value index is notional, so you can't actually take shares within that index. It's used as a benchmark to place a value on these FX options, and so consequently, you're going to buy, say, a call option. It's going to cost you X number of dollars U.S. That call option ideally is going to appreciate in value, and you're going to receive X number of dollars in U.S. as a profit. So you're not taking possession of yen. You're not taking possession of you're not going to owe or have to deal in any other currency. This is just simply a vehicle to trade your outlook on these currencies, but done in such a way that you only have to worry about the U.S. dollar settlement. Okay, so again, Steve, can you comment on that a little more? Is that
Jason's again right on target. The reason that the ISE came up with this about 19 or 20 months ago, we've been trading for 18 months, was exactly like Jason said, that we went out and asked the customers that were interested, and they said, what, the one biggest impediment is that they didn't really want to get Japanese yen at the end of the option site period of life. Where that's what you'd get in a futures contract, is it delivers into some contract, whether it's British pounds or Japanese yen, Australian dollars. We just felt that it was much easier to have it be cash settled. And if you look at the most popular indexes in the United States, whether they're traded at the CBOE or anywhere else, most of them are cash settled for that reason. It just makes it very easy on expiration day or settlement. People just settle in cash. Most options, as Jason said, though, get closed out prior to that cash settlement, though.
Okay, good stuff. So we'll move forward here. The specifications for these specific pair values is actually quite simple. So realistically, you have a modifier that is being applied to the actual spot market value. So as you can see here, the U.S. dollar versus the Canadian dollar, we have a 100-point modifier. So for example, the ISE pair value may be 125.63, But in the spot market, you're looking at the U.S. dollar and the Canadian dollar at 1.2563. So incidentally, we're paying about 25% on the dollar to do business with you guys. But nonetheless,
we'll see how long that lasts, Jake.
We will indeed. And I'll be calling it on a weekly basis. You can rest assured.
Exactly.
As you can see here, the one modifier that was left at 1 was the U.S. dollar versus the Japanese yen, because generally it trades in the 100 range. So at this point, what you can see is that the ISE FX option pair value YUK would be charted at 96.73, and in the spot market it would be 96.73. And as we move down, you'll notice that the euro, the pound, the Aussie dollar, and the Swiss franc are all using the $100 or 100-point multiplier. So again, for those of you that are spot market traders, you can simply multiply, other than the ones that are inverse, which we're going to talk about in a second, you can multiply that spot market value, and you'll see that it very closely compares to what the ISE FX option pair value is trading at. Now you'll notice that I've got some asterisks beside three of the pair values here. Well, quite simply, in the spot market, the U.S. dollar is not the base currency for these three currencies. So what the ISE has done, as we mentioned, is they've made the U.S. dollar the base currency. So any charts that you're looking at with respect to trying to figure out your directional bias on using an ISE FX option pair value for these three is going to appear inverse. Okay, so how that's essentially going to look, for example, let me just first of all highlight the close parity between the spot market and the option market. And incidentally, you can see here that we were trading this is going a while back, but at 1.0084 U.S. dollar versus Canadian dollar in the spot market. At the same time, in the ISE FX option pair value quote, we were at 100.84. So I managed to snap these screenshots very, very close to one another. You can see that both the patterns are almost identical. The only difference, of course, is the way that the price is being or the pair value is being quoted. So again, recognize that there is a very, very close resemblance between the two markets, and so you can trade these using these FX options very, very comfortably, knowing that they're reflecting the underlying spot market extremely close. Now, in saying that, here's an example of a reciprocal or of an inverse price chart using the Great British Pound versus the U.S. dollar in the spot market and the BPX, which is the ISE FX options pair value. You can see in the spot market we were looking at the British Pound going up, so clearly this was a while back. And in this particular example on the other side, although almost a mirror image, it's showing us that U.S. dollar is going down against the British Pound. So you've got that inverse relationship going on between the spot market and your ISE FX options pair value. Now, again, you can see how the quotes are also specifically stated to reflect that inverse relationship as well. And the one thing that I just want to draw your attention to is that we're still going to use the same technical approach when it comes to looking for a potential trade opportunity. So here I've just used an example of a bull flag, and we're anticipating the British Pound going up against the U.S. dollar, waiting for a key break of a pivot. And on your ISE FX options pair value BPX, we're looking at a bear flag. We're really saying the same thing. It's just we're looking at taking the opportunity in the opposite direction. So in this case, because it's U.S. dollar based, we'd be looking at buying put options to take advantage of a U.S. dollar weakening against the pound.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.